Hello friends, welcome to the Warrior series of BFM. As you know, in the Warrior series, we are covering the case studies, numericals, objective questions, theory, concepts, everything. And it's all free, available on the same channel. That's why subscribe to the channel JAIIB CAIIB English Medium. Okay, subscribe, like this video, subscribe to this channel, click on the bell icon. Don't miss this. Very important case studies. See, BFM, the importance of case studies, all of you know. Roughly 40 marks are case studies and 60 marks are one single mark. Out of these 40 marks, roughly 25 marks are numerical case studies. 15 marks are this theory case studies. So, by solving the case studies and the objective questions, you will be able to clear the paper. Okay, the one who thinks he will be clearing the paper without solving the case studies can't do it. So that's why we cover over here case studies plus MCQs, everything. Today I'll be covering some MCQs, basic but very important, related to risk management, all of them. So watch it completely, share it with your friends, like the video, okay? So now, let's cover the risk management part, okay? Risk management. So, first one, internal and external loss data collection is required to estimate a loss on account of. So, internal and external loss data is required to estimate the loss on account of. So, internal and external data happens because of what? Is it because of market risk, credit risk, interest rate risk, operational risk, or exchange risk? Generally, it is internal and external loss data. These two terms are always used for. Why? Where? Where are they used? Comment section, check. These two terms are always used for exchange risk. Always remember, internal and external loss data is always used for exchange risk. Got it? Next. Compliance risk is a part of credit risk, market risk, reputational risk, a separate category by itself, and exchange risk. So compliance risk is a part of. Yes. See, it depends on bank to bank. Okay, compliance is actually an operational risk part. Operational risk part. Actually, it is operational risk. But among the options, if you want to check, if among these options, if you want to give the answer, then it is near to exchange risk. Then it is near to exchange risk. But actually, compliance is a part of operations. Okay? So check in the exam if they give you the answer as operations risk, operations, then tick mark on operations. Okay? Credit, market, ops, reputational. These will be the four options given. Now, if you have a separate question like both are given, operation and exchange, then which one? Then operations. The best answer is operations. If it is not given, then exchange. Okay? Credit risk does not arise from which of the following? Risk of default, risk of erosion in the value of the security, risk of asset quality, risk of banks' credit policies, risk of deterioration in the credit rating. So, credit risk does not arise. See, this is a tough question. Does not arise because of what? Credit risk. Yes. Because of what? Risk of default. Yes, it can be there. Risk of default can be there. Isn't it? Default risk can be it's a part of credit risk only. Credit risk has two parts, country and counterparty. Counterparty means default risk. Risk of erosion in the value of the security. That's also right. If security is gone, then loan becomes unsecured. So that is the risk of credit. Risk of asset quality. Asset quality. Okay. Suppose if the assets go on reducing, they become deteriorate, then there's a problem. Asset quality. Risk of banks' credit policies. Credit policies. Okay, means banks' own policies, and risk of deterioration in the credit rating. Now, which is the nearest answer? Does not. All these four will directly affect, but this one will indirectly affect, not directly. You can say it will affect the this credit risk, okay, but not directly. Remaining all will do directly. Credit rating is done by the external agencies, okay. So next, RBI conducts off-site surveillance of banks by conducting AFI, by regular inspections, by calling for details on various parameters between two on-site inspections, by writing letters and calling for information, by installing surveillance cameras in the head office. How does RBI do this off-site? Yeah. Firstly, what is on-site and off-site? Firstly, understand that. What is on-site and off-site inspection? See, RBI is very clear about it. RBI says per year there should be an on-site inspection for big accounts. Simple. Now, per year there will be one over year, one over year. So this is on-site. On-site means directly going to the branch or the bank and doing the inspection. In between, to check the quality of the assets. Now, year to year is a big period. So in between, if they have to check, what will they do? They'll call for the documentation. So calling for the details on various parameters between two on-site inspections. Documents are called in the RBI office. Nowadays we have software. Banks are told directly to upload the documents. Okay? So this is off-site. Got it? This is off-site. Next, read this. Financial frauds are called white collar crime because, why are they called white collar crime? Financial frauds. They are committed without intention. They are committed by people who are not aware of the consequence. They are committed by educated and sophisticated persons who are otherwise respectable. There is no dirt in the collar while committing crime. They are committed by white people. White collar, isn't it? Financial frauds are white. You check various companies, Vijay Mallya, Nirav Modi, all these were respected on Economic Times, all the CNBC News, everywhere these guys were there. Right? They are committed by educated and sophisticated persons who are otherwise respectable. Ramlinga Raju, Satyam, head, right? White collar. Got it? Dash is a tool in the hands of RBI for effecting off-site surveillance. Off-site. Various control returns, camels, parameter information, statutory return under section 42 of RBI Act, AFI, monitoring through revenue intelligence officers. So which is the tool? Yes? Which is the tool? The tool is very important tool that is called as camels. Okay? Camels. Got it? Camels and calcs. Two important tools are there. Kindly study about them. Camels and calc. 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 These are the two important tools. Okay, large loan. This relates to large loans and this relates to many terms are there. Okay. Capital adequacy, management. Okay. Various 5-6 terms are there. Kindly study these without fail. Camels and calcs. ICAP means Internal Capital Adequacy Assessment Process. International Capital Assertment Arrangement Program. Internal Capital Assertment and Adjustment Process. Internal Capital Adequacy Analysis Process. Integral Capital Assessment Analysis Program. So ICAP means what? Yes? Everyone think? These all questions are there in your CAIIB also. Kindly remember. Okay? Yeah, these all are there in CAIIB also. Kindly, I would suggest you should all give CAIIB. Okay? Somebody is asking me in the comment section that what is CAMEL's full form? Okay, I'll give that. First, let's do the answer for this. So the answer for this is ICAP, Internal Capital Adequacy Assessment Process. This document is prepared by each bank. RBI compares the ICAP of the bank with its standard ICAP and then gives the rating. If there is any deviation, RBI points it out. Got it? So ICAP is Internal Capital Adequacy Assessment Program, very important one. Yeah, I was talking of CAMELS, right? So CAMELS means what? Capital adequacy, asset quality, management, earnings, and what? Liquidity, and last one is sensitivity. Okay, it's CAMELS, S, sensitivity. Okay, capital adequacy, asset quality, management, earnings, liquidity, and sensitivity. Got it? Clear? And calc means, what is calc? Let me see how many of you can answer this. Calc, C-A-L-C. I'll give you the hint. It is large loans. Yeah, it is large loans. So, capital adequacy, asset quality, liquidity, and compliance and systems. Okay? Capital adequacy, asset quality, liquidity, compliance, and systems. It's CALCS, S. So these are all related to large loans. These are not related to smaller loans. CALCS is mainly related to large loans. Okay? So done this. ICAP, everyone got it. Internal Capital Adequacy Assessment Process. Very important term from your exam point of view. Because RBI is very strict on ICAP now. Every bank has to focus on ICAP. Okay? This is the major part in your module B of CAIB also. See, everyone should give CAIB. Okay? Prepayment of loans or premature withdrawal deposits denote. What is this type of risk called as? Prepayment of loans or premature withdrawal. Credit, operational, embedded option, group, and default. The answer over here is embedded option. Kindly note, embedded option risk means what? Any depositor tomorrow or FD holder can come to you and give back your FD and take back the money. So premature withdrawal. Similarly for loan also. Any depositor, any loan borrower tomorrow can come to you and give back all your money and close the loan. So you'll say, what is the problem then? The problem is in ALM, asset liability management. If any big loan gets closed, you have a huge sufferings in the ALM. If a big deposit gets withdrawn, then you have a problem in the ALM, asset liability management. Very big issue for the banks. Okay? Depositor's photo is not obtained while obtaining the account in many cases. What type of risk is this? Market risk, credit risk, business strategy risk, internal control risk, exchange rate risk. So simple. Yes? Very simple question, but very basic also, but required also. Yeah. So depositor's photo is not taken. It's a internal control. Okay, it's an internal control based risk, isn't it? Because remaining all are related to this finance. This is basically compliance and basic internal control. You are not following the systems. If the income tax deducted from the depositor's account is not remitted within the stipulated time, it constitutes internal control risk, reputation risk, earning risk, compliance risk, and credit risk. Very simple. Income tax you have deducted from the client's account. So you have to give it to income tax department. If you don't give, what are you doing actually? You are committing a fraud. Isn't it? You are committing a fraud. You are taking the money from the client and not giving it to the concerned department. So basically it's a compliance part, compliance risk. Okay? A bank holds security in an advance account that is rated A plus. The rating of the security migrates to A. What is the risk that the bank has faced? So rating has migrated to A from A plus. So what is the risk that the bank has faced? Market risk, operational risk, market liquidation risk, credit risk, interest rate risk. A plus to A. If the rating of the security falls down, what happens? Yes, what happens? If the rating falls down for any security, the collateral value of that reduces. Collateral reduces means you will be facing the credit risk. It will be a credit risk if the rating reduces. Okay? So this will indirectly affect the credit risk. Kindly note, it's a major credit risk. Many of you have written market liquidation risk. That is not a point. Market liquidation is not related to your security. It's related to the bonds which you purchase. Which one is not the part of common equity tier 1 capital under Basel II? Not. Kindly note the question, not. Not the part. Equity capital, share premium, dividend, statutory reserves and general reserves. Not the part. Huh? Pay attention. Not the part. Yes, not the part. Kindly note, what does tier 1 include? Tier 1 will include, CET1 will include, see CET, common equity tier 1. It will include basically 4 elements. What are the 4 elements? 1, shares. Shares means equity capital. Okay, shares. Or you can call it equity capital. Second is net profit. Third is reserves, R&S, reserves and surplus. And fourth is revaluation reserves. Reval reserves. Okay. So these are the 4 elements mainly. Now, out of these 4, look at this. Equity capital. So shares there. Share premium. Premium means the extra amount which you get over the face value. What is share premium? Let's say a Reliance share. A Reliance share face value is 2 rupees. But the price of the Reliance is around 3000. Around. So the difference 3000 minus 2 rupees face value. This remaining difference is known as the premium. So this premium is a part of your CET1 because that you have earned because of your own Reliance has earned this. Right? You start issuing the shares tomorrow. Will people give you 3000 rupees for 2 rupees face value? No. They have earned the trust. So it's their money then. Okay? So share premium is a part of CET1. Dividend. How can dividend be the part of CET? It's a dividend is distributed. It is given. So this is not the part of CET1. Statutory reserves. These are the part of CET1. Kindly note, many of you are thinking that statutory reserves are not the part of tier 1, CET1, but they are. Even the general reserves, they are the part of CET1. Okay, so only dividend is not a part of CET1. Okay. Which of the following is the best explanation of inflation? Increase in income level, decrease in income level, decrease in income level and increase in prices. Increase in money supply and increase in prices. Increase in money supply. Yeah. I am seeing many answers coming over here. Decrease in income level and increase in prices. That's what I am seeing the answer. Majority of you are giving. My income is reducing. I can't borrow more things. So decrease in income level. Not the right answer. The right answer is increase in money supply and increase in prices. Very simple. Inflation happens because the money supply increases. Why will money supply increase? If RBI brings down the repo, okay, repo down, CRR down, okay, these two are down and see, if these two are down, then also inflation might not increase because in our country both are down, but then also inflation is not increasing. Why? Because we are growing GDP. If GDP is also down, and then all these three are down, then there will be an inflation. But if the GDP is going up and then these two are down, then there will be no inflation. But it should be proportionate. There will be no inflation. Right now you see in countries like USA and Europe, England also, these two are down, but GDP is not up. So that's why these countries are all facing the inflations, right? Remember this simple thumb rule, okay? So money supply will also increase because repo has decreased and CRR has decreased. Got it? Demographic dividend is directly related to demographic dividend. Youth, stock market, performance of the economy, gross domestic product, population and economic income from agriculture. So it is directly related to what? Demographic dividend means what? What do you mean by this word? Young population, young population, that is meant by demographic dividend. Okay, young population is known as demographic dividend. India is a young country because we are having the highest population below 35 years. So that's why demographic dividend relates to population. Got it? Venture capital fund provides financial assistance to high risk ventures, high tech ventures only, high profitable ventures only, high risk and high tech ventures, first time entrepreneurs only. Think. VCs, we call it VCs, right? VCs give financial assistance to whom? To high risk and high technology. They generally invest in this high risk and high technology. Okay? National Institute of Securities Market has been established for NISM, trading in securities, providing professional certification, coordinating between security traders, granting license to security traders, establishing norms for security trading. Many of you might have given NISM exams also, right? AMFI, mutual fund, insurance is also, IRD is also covered by them. So it relates to professional certification, correct? It relates to professional certification, kindly note. Okay, it relates to professional certification. Next. Corporate governance measures for Indian companies have been defined by RBI, Ministry of Finance, Confederation of Indian Industries, SEBI, and Associated Chamber of Commerce. Who defines corporate governance? Corporate governance is an important part because your module D in means CIB also, and in many corporate governance means transparency. Basel 3 is a major part. Basel 3 covers mainly this corporate governance. So who defines the corporate governance rules? It is defined by SEBI, Securities and Exchange Board of India. It defines it. Okay? Which of the following is not true about payment bank? Payment bank, very important term. Minimum paid up capital is 100 crores. For first 5 years, promoter stake should be 40%. Voting right of one shareholder not to exceed 10% at present. Maximum deposit from one customer shall not exceed 1.5 lakh. It cannot undertake lending business activities. Very simple answer over here. Right? Very simple. How many of you can answer this? Deposit, how can you give a limit for deposit? Because after all, these are private banks. These are limited companies. So how can you give a maximum deposit should be 1.5 lakhs? What is this? 1.5 lakhs? From one customer shall not go beyond this. It is for Jan-Dhan account, not over here. Okay? Remaining all points are correct. Kindly note, very important term, payment bank. Maximum paid up capital of 100 crores. For first 5 years, promoter stake 40% minimum. Voting right, one shareholder not to exceed 10%. This is there in all the banks. All your banks are having the same rule. One shareholder not to exceed 10%. And it cannot undertake lending business. That is not allowed to payment banks. Which one of the following is not characteristic of small finance bank? Minimum paid up capital is to be 100 crores. Existing MFI, NBFC, LAB, local area bank, LAB means local area bank, are allowed to set up small finance bank. Promoter's equity to be 40%. 50% of the loan should be of ticket size of 25 lakhs. See, not 50% of the loan should be to priority sector. Now, which one is not correct? Which one is not correct? Small finance banks. The answer is E. 50% of the loans should be to priority sector. Not correct. These, for small finance banks also, they have the same rule almost as that of the cooperative and RRBs. Okay, so 50% is not the rule. Remaining all are correct. 100 crores, minimum paid up, existing MFI, LAB are allowed to set up small finance banks. Promoter's equity to be 40% and 50% of the loans should be below 25 lakhs. Okay? Got it? Now, before going, everyone, kindly download the Adda 24/7 app and join the paid batches immediately. The crash course is just starting now. See, it is starting on 24th of October. Don't miss this. Because this crash course is very useful to you. Available on both Google as well as Apple. See, this crash course for JAIIB, very, very, very important for you. Okay? JAIIB crash course. E-books, mock test, online live classes, recorded sessions, everything is available. Mock tests are chapter wise as well as full length, both. So join this ASAP and to the point, very fast speed, to the point, starting on 24th October. So you have still, means you have not missed even a single lecture. Okay, so join this and we are covering the ebooks, mock tests, all the chapters. And what is the code? See this, remember the code Y432. See this, 79% discount plus 1% extra, 80%. So 80% discount you are getting. Now if you join the Mahapack, see this is the crash course. If you join the Mahapack, JAIIB Mahapack, there you get 15 plus batches per subject. Look at this, 15 plus batches per subject. Right now double validity offer is going on. Means you buy for 6 months, you get it for 12 months. See this, 6 months you buy, get it for 12 months. Buy for 12 months, you get it for 24 months. Huge it is. So join ASAP. And in Mahapack, what do you get? You get 15 plus batches per subject, plus you get question bank physical delivered at your home. Plus you get formula bank physical delivered at your home. So everything is available. 15 plus batches, mock test are chapter wise, full length, both same as that of your exam. But don't forget the code. Code is Y432. Use the code Y432. You will get double validity, 80% discount, mock test, all this, what all benefits are there, everything you will be getting. Okay, so join us at. Bye everyone.